has emerged out of the demerger process from Bajaj Electricals, I have been assuming this role since its inception. I'm deeply aware that your company's position today is an outcome of the invaluable support that we have received from our stakeholders over the years. On behalf of Team Bajel, I thank you all for your support. On your behalf, I would like to welcome all the board members. Also, I'd like to take this opportunity to place my record, my deep sense of gratitude to all my colleagues on the board for their counsel and support, who, despite their busy commitments elsewhere, are always available for guidance, and they bring a wide range of skill sets which complements our business operations. The annual report for the year ending 31st March 2024, along with the AGM notice, director's report, and the audited annual accounts of the company have been circulated to you. With your permission, I shall take them as read. The scheme of arrangement under Section 232 of the Companies Act 2013. Consequent to the approval accorded by the Honorable Company Law Board, Mumbai branch, the scheme of arrangement between Bajaj Electricals Limited and the company and their respective shareholders involving the transfer by way of demerger of the demerged undertaking consisting of power transmission, power distribution business, and our Ranjangaon factory into Bajel was completed with effect from September 1st, 2023. Further, upon receipt of the approval of the Stock Exchange, Bombay Stock Exchange and NSE, the shares of the company were listed and the trading in our stock commenced in the bourses with effect from December 19, 2023. The core foundation of the company lies in the organization transformation that we have embarked upon. This comprises strengthening of our people, processes, and systems, as well as our overall organizational culture to drive superior performance in a more institutionalized basis. We expect to do well on all these parameters and remain committed to it. We continue to drive growth in our business while adopting a more risk-calibrated approach with a focus on timely completion of existing projects in hand. Our objective is to have a strong balance sheet and good profits. With our past experience, we'll be choosy in our business and have learned when to say no. Very important. Overview of the company's performance during the financial year 2023-24. 2023-24 was the first year of your company's operation and significant in multiple ways as we move through a multi-year transformational journey to build a new company, that is Bajel Projects. For the year ending 31st March 2024, your company achieved income from operation of 1,169 crore as against 663 crores, an increase of 76.17% over the corresponding period of the previous year. For the year, the company has made a profit after tax of 4.29 crore against a loss of 1.58 crores in the corresponding period of the previous year. The corresponding period of the previous year is for a period from the date of incorporation, that is from 19 January 2022 to 31st March 23 being the first financial year of the company. Now I take you through the Q1 performance approved by the board on the 8th of August 2024. We have achieved income from operation of 512.02 crore as against 205.01 crore, an increase of 150% over the first quarter of the previous year. For the quarter, the company had made a profit after tax of 5.52 crore as against loss of 1.7 crores in the corresponding first quarter of the previous year. The order book during the beginning of the current quarter stood at 3,597 crore, comprising of 2,686 crores of power transmission, 855 crores for power distribution, and 55.65 crores for international projects. Outlook and opportunities. The Indian economy, in terms of real GDP, has grown at a CAGR of 8.1% over the last 3 years, from financial year 21-22 to 23-24. Despite global uncertainties, continued wars, and increase in interest rates by world's leading banks, India remains a beacon of hope driven by strong fundamentals. These include strong domestic demand, demographic dividend, urbanization, and industrial growth. The continuous effort by the government towards reforms and capital expenditure further providing impetus to the growth. The global shift towards renewable energy sources necessitated the formation of resilient, reliable, and intelligent electricity grids. With the growing emphasis on solar and wind power, the need for robust transmission and distribution infrastructure has become paramount to efficiently deliver round the clock power to end users. In India today, there is a growth on the power supply side, driven by renewable energy, on the power demand side, driven by higher per capita consumption, industrialization, and digitization. Our company is well positioned to capture these opportunities as we continue to grow our transmission and distribution portfolio with increased focus on both projects and products, and also look at the international business. While our businesses continue to evolve and progress, the true foundation of our next decade of growth is being laid through a comprehensive organization transformation. We have initiated multiple initiatives in this regard. We are strengthening our talent pool, including at the senior levels, with the induction of key senior executives. We are revamping various processes and systems across the company to drive more collaborative, responsive, robust, and secure operational performance. And above all, we are weaving together a strong organization culture that binds our people and channelizes their energy and talent to deliver exceptional growth for the company. I believe this transformative initiative will equip us with greater agility and resilience, driving us to ensure excellence across our operations. I would like to acknowledge and thank Mr. Rajesh Ganesh, our MD and CEO, our entire management team, employees, and business associates for all their contribution and effort for being part of the transformative journey. To my colleagues on the board, your support and guidance has been invaluable for the company. A special word of thanks to you, our valued shareholders, for your unstinted support and encouragement. Your confidence has been a considerable source of strength for Team Bajel. I am sure Team Bajel can continue to look at your goodwill and support in the years ahead. Your strong support and faith in us, and this inspires us to achieve newer milestones of success. In terms of provision of the Companies Act 2013 and the rules framed under the Securities Exchange Board of India Listing Obligation and Disclosure Requirement Regulation 2015, members holding shares of dematerialized form as on cutoff date of 13th August 2024 were entitled to exercise their votes on the resolution contained in the AGM notice. The remote e-voting period commenced on 16th of August 2024 from 9 a.m. onwards and ended on 20th of August 2024 at 5 p.m. Shareholders holding shares as on the cutoff date were provided an option to either cast their votes remotely during this period by logging into the e-voting platform of Lincoln balance sheet under control. So from a 2,000 crore in Bajaj Electricals outstanding, which debt was there in 2019, 31st March. By 2022, 31st March, we became a debt-free company, Bajaj Electricals. And Bajel also, after transfer, it became a debt-free company. So therefore, that is something which was very important. Also, what have we done differently is that we have learned what not to do. It's very easy to do. What you need to do is very simple. What happened is that we were looking at top line. Now we are looking at the balance sheet, and therefore, very clearly, we are only taking orders where our cash flows are good and where our margins are better. And therefore, we are going to be very choosy. And therefore, we are not looking at top line. So somebody was asking that, will you go back to Jamnalal Sons to get some more limits? Because if we get some very big order, we will not take those big orders. We are interested in doing a good job and doing it on time. So like somebody asked a question that you have an order of 3,500 crore. Now, how soon will you cover it? We are looking at anything between 22 and 2,400 crores for the year. As far as that figure was asked, that when will you cross your 3,200? Next year we'll clearly cross it. There's no issue at all. As far as that's concerned, the loss was happening because when you have a good P&L, when you do a good billing, you get your margins and you get your profitability. But we were not able to collect the money, and therefore, because of that, losses were happening because we could not finish the projects on time. Therefore, we were losing money. So the question, one of the speakers were asking that how do you make sure that we will complete the project in time? That is one of the things which we are doing. We'll take limited business and try and finish before time. That is so all the areas where we have made mistakes, where we've lost money in the last so many years, we are making sure that in Bajel, those things will not be repeated. As far as dividend is concerned, let's hope that we start making sufficient profit. We need just now cash flows. With a new company, we have an advantage of being a 15-year experienced company, but from a banking point of view, it's a new company, and therefore to get the limits and all. So at this moment, we need cash flow, as somebody says. So therefore, we are not in a hurry to give you dividends, but yes, we want to continue to make good profits for you. And if the good profits come, the money is still yours only. So don't worry, it's lying with us to use it properly. We will not put it in like in Bajaj Auto and all, they put in FDs and all. We are not going to put that. Once we have enough money available, you can take it for sure that we will like to give it out as dividend. But at this moment, I think next few years, we should try and build up our reserves, build up our cash flows, and be able to take care. As far as other items are concerned, I will request our MD and CEO, Mr. Rajesh Ganesh, to take over and answer all those questions. I'm sure most of your questions will be answered, but there are so many of them. If we take that, it will take 1 hour. So let him go and try to do as fast as he can. Thank you.
Okay. Thank you very much, Mr. Chairman. Also, thank you to all the shareholders. There's so many questions, as the chairman rightly said. So what we've done very quickly is to sort of structure it into some broad themes. So what I'll do is I'll go theme by theme, and hopefully that will answer majority of the questions that's been posed. I think the first theme that's come is strategy. So let me speak a little bit about that. As the chairman also highlighted in his opening speech, India, the power demand in India is slated to grow. It's likely to be definitely greater than 900 gigawatts by 2030. So that's actually quite a significant jump from where the capacity is now to where we want to go. So there's a lot of activities that are happening in building both generation capacity as well as distribution capability. Now, distribution capability is where we come. So you see quite a lot of activities that are happening in the government space, whether it is at the central government level, which is TBCB projects, or whether it's at the state government levels, which the state utilities are undertaking, either with or without the help of the central government. Considerable amount of reforms have already happened to isolate a lot of these initiatives from, say, the utility that collects revenue from from consumers. So to that extent, demand is likely to be quite robust in the next 5 years at least, going forward. So then our strategy, which we named it as Rasta 2030, is largely focusing on the mindset with which we approach the strategy. And the strategy that we have put together focuses on, at the moment, our current business verticals are largely power transmission, power distribution, and we have a very, very small international EPC business, which at the moment it's only about 5% for those who want to know what the mix is. But then the strategy going forward for us would be to improve our international business, because there's an opportunity outside India as well, which is rather large. Given that a lot of renewable energy is coming onto the grid needs to be rebalanced as well, and a lot of new grid is being built, and the old grid is being refurbished. So there's an opportunity there, which we are quite keen to capitalize over the next 5 years. So we are likely to see the international business grow to at least 15% of our portfolio going forward over the next 5 years. Now, coming to domestic business, we'll continue to focus on projects in the power transmission space, because these are large projects, and we're also seeing that the ratings of these projects, and the size of these projects, and the complexity of these projects are continuing to kind of grow. So we will focus more on the high end, like 765 or even more if that comes, on HVDC, on GI substations and projects like that, because we feel that it's the competitive capability that we have and the number of people playing in that segment is also quite low. So to that extent, we feel that we'll be able to extract much more value and also deliver much more value in those areas. We will be a lot more choosy when it goes to power distribution business, or working with the local discoms, and there we'll pick projects where we can add value, or where there is a competitive advantage that we get in terms of either our quality or either our execution capability. And again, needless to say, we will only participate if the margins are attractive. We will not be looking at businesses that are of low margin. The fourth point is that we are looking at our strategy from sort of two angles. One is the project angle, but also on the products angle. So we think there's a reasonably big products business both in India as well as outside India. We've got a facility at Ranjangaon, which is well positioned actually to suits more the international business, given its proximity to JNPT. So we are looking at, over the course of the next 1 or 2 years, we'll be looking at making investments in the Ranjangaon plant in order to enhance our galvanizing bath capability, and also to increase the production of our monopoles. So both of these are quite important for us to build a formidable product supply business. And as part of the strategy, we have also undertaken an organizational redesign, which largely sort of focuses on how we can move these products at an efficient cost, to customers, not just in India but outside India as well. To that extent, we are also changing our organization to suit the new strategy that we have put in place. Now, to talk a little bit about monopoles, I think there were questions about monopoles. The prime advantage of monopole is it takes less space to set it up. Yeah, I mean, a lattice tower of 400 or 765 takes a lot of space, and that's a big advantage of monopoles, and it's particularly advantageous in city locations where space is a premium. So if we look at the total cost of the monopole, including the land, it's coming down as production capacity increases, and over the next few years, we are likely to see more monopoles coming in city locations, not just in India, but also outside India. And we'd like to be at the forefront of it by investing in capacity before we get to that curve. So that's largely, I suppose that answers most of the questions. If you look at our breakup of our current sort of revenues, we are quite heavy in terms of power transmission. It's 60 odd plus percent of the portfolio, and likely and it's growing as well. Power distribution was quite big a few years ago, but that's been scaled down as Mr. Chairman mentioned himself. And there again, as I said, we'll be focusing on a very specific niche, a sort of businesses, as opposed to participating in all of the business opportunities that come. Our business is largely tender based, at least till now, and our exposure currently is to a large extent to government companies. But as part of our strategy, we're looking at that also. We are looking at shifting to look for opportunities with other private companies who are participating in the TBCB tender as well. Now, yeah, so that is to a large extent that's the strategy. Now let me talk a little bit about borrowing limits. I think that came up as a so currently we have a bank limit of roughly 1,200 crores. We have a consortium of banks that lends this, and we have a comfort letter that's been given by Jamnalal Sons, which sort of helped us to get that limit. We are a growing business, as the chairman said. We are likely to double our business this year as compared to last year, and this trend is likely to continue going forward. May not be double, but still the growth is likely to continue going forward. The nature of our business is such that we need to have these bank limits. Now, why do we need the bank limits? The bank limits are needed largely for earnest money deposit, given that a big chunk of our business is tender based. So tenders do require an EMD to sort of start off. And when we win these tenders, a performance bank guarantee needs to be given alongside with it, and retention guarantees need to be given. So LCs need to be opened in order to buy raw material, so that we can convert that raw material into towers and other parts that are needed to execute these projects. So all of these are dependent on bank limits. Now, I mean, an estimate that my CFO did was that we need roughly, say, about 30 to 35% of the value of the order as bank limits in order for us to commence our work. So these bank limits are actually quite important. Now, to add to the challenge, we are a year-old organization, even though we do have the legacy of the Bajaj Group behind us, and that does give us certain advantages. We still are a year-old company, and we are growing quite fast. And that's the reason why we've asked for a higher bank limit, and this bank limit would help us to convert a lot of the order book that we have into projects on the ground, and also to participate in more business opportunities in order to also enhance the order book. So that's why the bank limits are quite important, and that's the reason why we've requested for permission to go for a larger bank limit going forward in order to grow our business. There was a question on international business. Yeah, so there's, thank you, Mr. Chairman. There's also another dimension to the bank limits, which is insurance bonds, or it's called bid bonds more colloquially. Now, instead of the banks providing these limits, companies, well, the NHAI road authorities have already set a precedence in this direction where they accept bid bonds. Now, PGCIL and other companies, public sector companies in the power transmission space are also contemplating this. So should that happen, that is advantageous to us in the sense that we don't have to, to that extent, the margin money that gets blocked can be brought back into working capital and into rotation of working capital. So that's an advantage, but that is some time away, and I think Power Grid is contemplating the acceptance of bid bonds going forward. But should that happen, and we have reasons to believe that it may happen rather soon, that's an added advantage. But however, we still would need bank limits in order to run our business going forward, given the number of LCs and not everybody accepts bid bonds. So it will take a while for all of the conversion from bank limits to bid bonds to happen. So that's a little bit of a dimension on insurance bid bonds as a potential substitute for bank limits. I think one of the shareholders spoke about international business, and yes, we are actually quite keen in expanding our presence in the international business. Majority of our competitors are already there in international markets, and we're probably the last one really to go there. Now that's I see that as an advantage because we can learn from the mistakes that others have made, and that's perhaps the best way to learn. So we are going to be very selective in picking businesses outside of India. We are looking at projects that are multilateral funded only. We will deal in US dollars only, with the exception of perhaps one or two countries in the Middle East. But largely, that's going to be our criteria, and also the safety and security and the nature of the government in some of the countries that we are going to be targeting. So we're looking at both product as well as projects, but to a large extent, we would look at entering these businesses with the product route first, given that. Product route is a sort of a nice way for us in a low risk manner to enter some of these countries, as opposed to entering via a full-fledged project. So our focus will be to push products first, and that's where when I spoke about our manufacturing and supply chain strategy of increasing capacity at Ranjangaon sort of bodes well with this. Is we'd like to make a lot of these products which would then be exported out of India. Besides the advantage of dealing in US dollars, it also gives us an advantage to sort of understand the nature of the customers and how they deal with us in a sort of a low risk manner. And once we are assured about that, then we'll start to move into projects. The strategy is also to look at smaller projects first before we move forward. I'm of the firm opinion that local culture and local ways of working and mannerisms need to be understood before we start to fire big. So our initial strategy would be to do projects that are relatively small, and then understand, build our capabilities, and then slowly sort of move ourselves up. We are also quite keen to build a formidable reputation for ourselves based on execution. Which is easy to say, but very, very difficult to do, hence also very difficult to replicate. So our strategy would be to do projects, finish them to the satisfaction of our clients, and then ask for more. And we feel that on the long term, this would be a much better way for us to grow, as opposed to just pray and pick up as many projects as we can and then struggle to execute. So that's going to be the mindset that we will approach. Not just our international business, we'll approach our local business also with that mindset. There was another query on AI and digitization. Yeah, this is an exciting area, and while we have a lot to do in that space, but that's the future, and we will start to digitize. We're already looking at our plant first, in terms of using IoT and digitization. We're looking at measuring productivity in machines. We're looking at sort of seeing how we can improve our productivity inside the plant by using sensors that we can put. We can also get to understand how we can perhaps save costs by trying to measure electricity usage in different motors and different pumps, etc. So those are things that have already been kicked off, and more of that would come as we move forward. We also in the process of putting up our project management office, which use a very sophisticated project management system and software, where we'll have access to information literally on a real-time basis as execution happens. Now, these are technology enablers that we will use and will continue to use going forward in order to meet that objective of ours, which is to execute on time, on quality, on cost, and with zero safety incidents. So that's really sort of the four pillars that we have, which we've identified that we will have to meet for every project. So AI and digitization, yes, quite a lot of work is being done, but a lot needs to be done as well, which I accept. There was perhaps a question on Bajaj's royalty as well. Now, currently the royalty is about 1%, I'm told. However, I'd like to also sort of draw the attention of the shareholder to the impact. The impact's actually less than 50 lakhs. Now, the reason for this is we are in the process of building a Bajel brand as well. So a lot of our monopoles that are going now outside our plant, it doesn't actually carry the Bajaj brand, it actually carries the Bajel brand. And even internationally, when we send material out, it still carries the Bajel brand. So we are in the process of building the Bajel brand. And as the Bajel brand sort of, builds up a year or two more, we see this coming down to literally zero. There won't be any more payment.
I'd like to just add that this is only for those orders which are still pending with Bajaj brand. So it will be, I think, maximum next 1 year, this royalty will be over. So this is royalties for all orders which are still being executed, which is going under Bajaj brand. As is mentioned, Bajaj brand will take over, and after Bajaj brand takes over, there's no royalty to be paid. So therefore, that is only because we are using the Bajaj brand. Bajaj does not have a right on Bajaj brand. That is obviously belonging to Bajaj Electricals, and therefore that's a limited thing which you can say transitional, which would be stopping within the next 12 months maximum.
Yeah, thank you, Mr. Chairman. There were a couple of other questions on the nature of our contracts and are we looking at new sectors. So the nature of our contracts are largely now most of the TBCB contracts are fixed price contracts. So the nature of our contracts are largely fixed price contracts. Now, new sectors such as smart meters, we're not as excited about smart meters as perhaps some others may be. We don't have capabilities in smart meters. I suppose from that point of view, we would like to stay close to the core or adjacencies that are close to the core. For example, the new sectors that we are looking at is data centers. We're looking at battery energy storage solutions. We're looking at industrial sector. We're looking at metro. These are the areas that we're looking at. We have very strong adjacencies in these areas. So we also feel that the value we can deliver and the value we can extract or capture, the value we can create and the value we can capture in these sectors would be rather more than going into smart meters. As a strategy, we'd also like to proliferate our customer base, which, as some of you have already mentioned, is very sort of heavily tilted towards government sort of sectors. So in this will sort of help us achieve that objective as well, that we'd have a basket that is proliferated in terms of having a wide variety of customers. So our emphasis would be largely on data centers, on battery energy storage solutions, on metro, and not so much on smart meters. We did look at that sector, and we felt that our resources perhaps would be better, sort of better valued, and we'd be able to capture more if we do some of the areas that I mentioned earlier. I think, well, I suppose I've answered most of the queries, so I'm going to hand it back to the chairman. Thank you.
Thank you, Rajesh. I think it has been very comprehensive the way he's explained. Now you become all your shareholders have become an expert as far as business is concerned. I'm sure you're not going to become a competitor, but anyway, thank you for very much for hearing it out. I'm